Hello, I'm Mike Castle, Senior Commodities Economist here at StoneX. Obviously, there's been a lot of, chaos in the markets here, to say the least, over the last couple of months, certainly the last couple of weeks specific to the grain markets. We've been very focused on what's going on in the Black Sea region with the escalations between Russia and Ukraine on vessels and port infrastructure kind of expanding. So, as a primarily grain and ag commodities person, I think, I kind of always have a very different perspective on how to look at this. So I thought it would make a lot of sense to ask an expert as it comes to the freight market itself. I think probably a lot of disruptions on that side of things. So, who better to bring in than our very own Tom Beney here? Tom, if you want to maybe give us some background on yourself, and you can, be subject to me asking you questions.
Yeah, hi, Mike. So this is Tom Beney. I'm Senior Vice President Ocean Freight at StoneX, and there's a lot going on right now in the world when it comes to freight. So I think what we need to focus on is three areas primarily. Firstly, the Straits of Hormuz. Obviously, people are familiar with what's going on there. I think to make it very clear, the Straits of Hormuz is not in a normal situation. Vessels will go only in and out if they have security from either naval convoys or from governments that say that they are allowed to go in, and will cover them from an insurance perspective. And three, if the marine insurance market will actually give them coverage to go in and out. So essentially, the Straits is in a trickle situation at the moment for vessels going in and out, and we're nowhere near a normalization, particularly with the recent attacks on merchant ships. The second area we need to look at is the Red Sea, with the Houthis sending notices out to commercial shipping that if they load in Saudi Arabia, they will be seen as targets, and they have attacked ships in the past and have threatened to attack ships in the future. And that's one of the pipelines that is still open out of Saudi Arabia, coming out of the Red Sea. So that essentially has a major impact on oil flows. Thirdly, obviously, as you've mentioned, what's going on in the Black Sea and the Sea of Azov. And that's a particular interest for the grain markets, because you've got Russia and Ukraine are major exporters of wheat, and Ukraine also of corn. And so we are looking at a situation right now where there have been literally hundreds of ships have been attacked in that area over the last few years, but very, very focused now on the last month, where Ukraine is attacking Russian vessels, and Russia is attacking the Ukraine infrastructure to export. So we could have a situation, I think primarily right now, we have a situation where ships that have not gone in to discharge or have not gone in to load will not go in under the current scenario. The main export port out of Russia, which is Novorossiysk, is still open and is still functioning during daylight hours. But again, under a shipping contract, you have a war risk clause, and those clauses will be enacted so that major vessel owners will not allow their ships to go in there unless they have a big security given to them by the authorities. And on the Ukraine side, the grain export elevators for the deep sea ports in the Black Sea have been pretty much devastated, so they're inoperable at this stage. And in any case, I don't think you'd find a commercial ship owner who really would go in there. So Ukraine is exporting using its overland rail, etc., to bring that grain as much as possible into Europe. So the Black Sea is not closed. The Bosphorus and Dardanelles, which is the strait you go through to get into the Black Sea, is fully open. Romania has major ports like Constanza, which are able to load without problem. I think the issue really is focused on the Sea of Azov and the Russian and Ukrainian ports of loading, particularly for the grain ports. I think a big change in that would be as if Novorossiysk, for a commodities perspective, is if the Ukrainians were successful in knocking out Novorossiysk as an export port.
Yeah, and I think from the grain perspective, you talk about something like the Kerch Strait, pretty much Sea of Azov being shut off. That's roughly a quarter or so of Russia's typical wheat shipments, and Novo is their top port on the wheat side of things. And it seems like it's not a question of could Ukraine stop those loadings from happening if they wanted to. The question is probably, do they want to, right? Like obviously the PR aspect of cutting off food supply is something that I don't think we've seen them target a whole lot. And also just from a pure value perspective, energy is always the more lucrative target, which obviously Novo is very important for the energy side too. So you may end up, inadvertently impacting grains, even though the real target is the energy side of things. And, obviously the market has reacted extremely violently to this, right? We've seen this massive spike in wheat prices, regardless of the contract. And I think part of that, obviously, wheat is the thing that gets thought of first when we're talking about the Black Sea. And also the fact that we came into this with pretty big spec fund shorts, specifically in the Chicago and Matif contracts. As those specs cover those in, obviously they're bidding up over each other and driving those prices higher. I think one thing that'll be interesting is the timing. And, obviously that is a giant question. I don't know that anyone knows the answer, but I think from a wheat market specific perspective, you do at least have a bit of time up front from the demand side of the equation. Obviously for the suppliers, for Russia and Ukraine, it's really bad timing, right? You're right in the middle of harvest. Now you're not going to be able to move stuff out properly. That forces stuff to pile up. You run into some other kind of logistical snares in areas that already have a lot of them, to say the least. But from the demand side, a lot of your big wheat buyers up front have massive local crops. Like Turkey, for example, USDA has them producing a record wheat crop this year. So in theory, they don't have as immediate of a need as would be normal for this time. So maybe there's a little bit of leeway. But if you drag this out and see those North African, Turkish, whoever other buyers start to step in, and this is still impacted to this extent, that's a lot different story. That's a lot more other origins that effectively are forced to get pulled into this and ration off, what supply we do have. So I guess, maybe this is too difficult of a question and maybe too open-ended, but what would you say are the differences between what we're seeing in the Black Sea specifically today versus the last time we were this disrupted, which I think would have been 2023? And do you think this is something that continues indefinitely, or does this seem like something either side is kind of trying to, I don't know, gain some kind of leverage up front? Or I guess, is this an open-ended escalation and we don't really know where it ends?
So I'm not a strategist in terms of politics, but I think what Ukraine has figured out is that the Russians have way more to lose with this disruption than they do, because that effectively they were already exporting a lot of their wheat and corn overland. So it's not going to have a dramatic impact on them. I think it's a very big escalation compared to what we saw in 2023. In 2023, we didn't see attacks on merchant ships, really. What we were seeing is more infrastructure. And so I think this is a major escalation. I think it's a very calculated escalation by Ukraine, because they realize that this will really start to hurt people in Russia, particularly on their energy exports out of Novorossiysk. So it'd be interesting to see. I think primarily what we've seen is them attacking tanker vessels. I think there was a gas carrier which is very, very dangerous to have a fire on board one of those. The sad news is a number of seafarers have been killed during these attacks, and therefore the commercial shipping market is going to basically put any trade in and out of that area on hold unless it's, let's say, a Russian flag tanker or a Russian flag vessel which is being told to go in there by the authorities. So essentially, I see this is a major escalation in the Black Sea. There has been discussion of the Russians moving that product up to the Baltic and exporting out of the Baltic. The Baltic has a summer season in which to do that, because during the winter, and particularly in the Russian ports, you tend to get ice buildup and it's difficult for ships to get in. So they're effectively squeezing the Russia's ability as the number one. Well, I'm not sure whether they were the number one. I think they were at one point the number one wheat exporter. I'm certainly seeing on the freight market increased requests for Canadian-sourced wheat and Argentinian-sourced wheat, and I think that's probably the initial reaction, is how do we secure our supplies at this point? That has a massive impact on ton miles. If you can imagine, most of Russia-Ukraine's market they were exporting to was relatively close by. It was Mediterranean, maybe going through the Suez to the Middle East. Other areas in and around the Atlantic basin. If you have to take that and replace it with Argentina product into the Med or into North Africa, or Canadian product into the Med or North Africa, now we're increasing ton miles, and that's very positive for freight overall. But having said that, I think the initial reaction is a reduction in cargo, and then the secondary stage is that we all of a sudden we need to feed our people, we need to feed our animals, we need to get that wheat from somewhere else.
Yeah, I think that makes a lot of sense. And it does, it's got to come from somewhere, right? So I think that kind of speaks to how, even though the disruption is happening in specifically one area, it can have this downstream impact on the broader freight market, right? That impacts every commodity. And one question I have is, for a clean number, let's say there's been like 200 vessels hit between the Azov and Black Seas here in the last couple of weeks. You mentioned it's been mostly tankers thus far. Do you have any sense of, how many of these ships have been dry bulk vessels? Obviously talking about the grain side of things, fertilizer, when we're talking specific to ag commodities, that's how most of this stuff is moving. And I guess in the ships that have been hit, and maybe this is a stupid question, is, saying that a ship has been hit, does that mean that that ship is going to be taken out of commission for an extended period of time? Or has the stuff been, I guess, superficial enough that really the biggest limiting factor up front is that risk premium, or the willingness of insurers to let these ships actually go load at these places?
I think the thing that will stop the trade is insurance. That will become so expensive. And secondary to that is the attacking of infrastructure. So, rail lines, elevators, oil storage tanks, etc. If they are attacked, that will stop business. I think your question around how many dry bulk, I can't tell you specifically how many ships. What I know is that a lot of smaller ships, what I've seen, have been attacked, and those ships tend to move grain out of the Sea of Azov into local areas, into the Mediterranean, etc., North Africa. I haven't yet seen many of the large bulk carriers being targeted. So let's say 30,000 plus. So I think there's been some reticence to attack those bigger ships. When a ship gets attacked, obviously it depends on where and on the ship and exactly what damage there is. But if they hit the engine room, that ship's being taken out for a long period of time. And then it has to be towed to a dry dock. It has to be it take quite a long time to repair, et cetera, et cetera. In 2023, when we had the big problem in Ukraine, ships were stuck there for 2-3 years. So, before they were able to get out. So we can take a fair amount of ships out of commission here. And I think I think a lot of the smaller ships that get moving grain into local markets out of that area, I think that the biggest impact is around those. So you'll see perhaps bigger ships coming in from Argentina and the US and Canada bringing wheat into North Africa, and then it gets distributed from there in smaller parcels.
Gotcha. That actually makes a lot of sense. And I think that ties into, obviously wheat is the thing that is getting the focus up front. And I think, also part of that is, the time of year and also the fund positioning that I mentioned. But what I think this has the biggest impact potential for the U.S. balance sheet specifically is actually on the corn side of things, especially in the context of if that local shipping supply is disrupted, you put it into the context of what's happening fundamentally from the grain perspective as well, is Western Europe and specifically France is going through a really, really ugly growing season, right? They've been really hot, a lot of record high temps, very dry. That's doing significant damage to that corn crop. And from a global production scale, France is not a huge producer, right? They're the biggest EU corn producer, but compared to a Brazil, a US, whoever else, they're relatively small. But that can still impact our balance sheet here in the States because they're the top supplier to Spain, right? Like Spain is the biggest EU corn importer. A lot of that typically comes from France. If they don't have it, they have to come back into the market from elsewhere. Another one of those replacements would be Ukraine. If they're damaged, if there's, a lack of this local freight supply, or if there's damage to infrastructure that makes it prohibitive to use the ports and it's got to move over rail or on some overland route that makes it more expensive, that gives the US the freight advantage into there, right? Nice, easy trip across the Atlantic. And we've already seen kind of an uptick in EU corn imports from the States here just in the last year or two. And I think that could certainly continue. I think if anything, that keeps demand under U.S. corn exports. And from a market perspective, obviously, Brazil is our top competitor, right? Well, shouldn't that just shift to Brazil? They're using more corn at home than ever before. Like they're going through kind of an ethanol boom like we saw in the early 2000s. And it's not to say that they don't have, excess supply to participate in the export market, but that excess is kind of shrinking because, again, they've got more use at home. They're impacted by this exact same disruption that we're kind of mentioning, elsewhere in the Middle East, right? They're a big fuel importer. So now their fuel is really expensive. They're going to produce more ethanol. They're going to lean more on what they can produce domestically. So they upped their ethanol mandate another 2%. And I think that, kind of ties this conflict in the Black Sea into that as well. Like the reality is it's the commodity market. Everything is connected. But I think, the net result of that is you do have more support under U.S. corn exports in the 26-27 marketing year. So that makes any potential shock on the supply side of things or any of the other demand categories that much more meaningful. And I guess, that's kind of a long way to tie this back into the U.S. corn market. But, as a corn husker, I got to get it there eventually. But it is very interesting to think of this from the freight market perspective. And I guess to what extent are freight rates impacted? Is it more about the supply of the ships themselves, or do these attacks on port infrastructure that lead to closures there actually cut back on the demand for ships because they're unwilling to go there? How do we think about that when it comes to freight rates? Because there's kind of this two-sided pole.
Yeah, I think you have initially you lose some demand, right? Because all of a sudden you can't get the grain out. right? So you lose a little bit of demand. And I think that, but then over time, particularly with such an important product as wheat, from a government policy perspective, that you need to absolutely secure your supplies, and therefore over a longer period, it's very bullish freight. Particularly as we said, ton miles all of a sudden have to increase because under normal supply and demand fundamentals, grain comes out of the most efficient place for a particular import. And so over time, if you disturb that, which is effectively what military action does, it disturbs those supply chains. We're seeing that in a number of areas. All of a sudden, those supply chains have to become inefficient effectively. So ton miles increase, and there's an old saying in shipping, that war is good for shipping. And ship owners don't mind it because effectively, and what we've seen over the last 6 months, ship owners are earning more money than they have for quite a while, because military action has disturbed the supply chain. Not just military action, but tariffs and penalties and trade wars. All these different things affect the supply chain. And when you start to mess around with the efficiency of the supply chains, you start to increase the demand for ships, because ships need to do longer voyages, go to different places. All of a sudden they can't go to one place, but they have to go to another. And so it's not as efficient as it used to be. And I think you can throw on top of that right now fuel. The price of fuel is a major impact for shipping. So in the last, week and a half, we've seen effectively Brent rally significantly. I think we hit over $100 a barrel today, and that has an enormous impact on the freight that's now needed to move that cargo. So, again, we may initially see a bit of a fall off in demand because of that rise in the price of fuel, but then eventually what you're going to see is people have to feed their populations, they have to get the energy in, and so all you do is you create a pent-up demand, which then comes back at a later stage, and we saw that in 23 also. So I think to sort of wrap up military action and problems of supply chains from a freight perspective, longer term they're bullish. They're bullish for freight, and it makes an inefficient supply chain, which will then have to, you'll have to get product from somewhere else.
Yeah, no, that makes sense. And I think there's other things that could make that even more inefficient, especially if we do see legitimate disruptions in the Red Sea, for example, and folks having to take these long routes like they did previously. And one thing, just to tie it back to the ag commodities, the first ship that the Houthis sank back, I think in 2023, or maybe it was 24, regardless, was carrying fertilizer. So, it ties directly back into the ag markets, right? Everything ends up being impacted. And then throw in another one. And granted, for the sake of time, we won't go down every rabbit hole, but we are also in a strong El Nino year, which does occasionally lead to restrictions through the Panama Canal. I think we've seen some draft restrictions already this year. 2023 was the last time that happened too. Also a strong El Nino. Just kind of, again, points to the risks, and I guess maybe the way to term it would be potentially longer tails to these disruptions than maybe we're thinking about today. But again, for the sake of time, don't want to keep us here forever. But Tom, thank you very much. Appreciate the info. Always great to get insight.
Nice to talk through with you, Mike.
All right. Well, thank you guys for watching, and please make sure to like and subscribe to our channel.